This is Chad Toyne with a Tuesday, November 11 Market Minute from Trader PhD Ag Marketing. Get out your pencils. We got some new overhead price targets for you that trigger sell signals. We had a corn sell signal last week, so we got a new target for you there and a big downward adjustment from the new target that we had in new crop 26 spring wheat. They hit their target 2 weeks ago, but they pulled away back lower, so we have a sizable adjustment to make there. So here we go. Corn, old crop 25 stays December 25 at 454. New crop 26, new target December 26 at 480. No change in soybeans. Old crop 25 stays January at 1158. New crop 26 stays November 26 at 1142. No change in Chicago SRW wheat. Old crop 25 stays December at 569. New crop 26 stays July at 599. KCHRW wheat, old crop 25 now, December at 557. New crop 26 stays July at 593. Minneapolis HRS wheat, old crop 25 now, December at 569. New crop 26 now, September at 637. No change in cotton. Old crop 25 stays December 25 at 6650. New crop 26 stays December 26 at 6943. In the grains, corn and soybeans have been holding their gains very well these past couple of weeks. Optimism over China buying soybeans is, of course, helping soybeans, and steady demand is helping corn. Signs of weaker yields in corn are helping support that market. Chicago and KC wheat both had a 2-day pullback late last week, but now here so far this week, prices are holding up nicely. The clouds seem to be lifting in wheat. Spring wheat has got a little bit of a mind of its own, but the old crop December 25 is still within striking range of its target, so don't count them out yet. We have a WASDE report due out on Friday at 11 o'clock Central. We don't have any private estimates out yet, but the current chatter is that the USDA could lower both corn and soybean yields. A boost for soybeans was Chinese lifting of restrictions on U.S. companies to import U.S. soybeans, a reduction of trade tensions. China could still be buying soybeans under the radar with the lack of USDA reports while the government remains closed. The Senate, Monday night, did pass its version of the budget bill after 8 Democrats sided with Republicans. The bill heads back to the House for another vote before anything is permanent. And more on wheat. Econ is expecting Russia to produce less wheat in 2026 due to lower wheat plantings. But global stocks-to-use ratios are sitting at an 8-year high. The corn and soybean charts continue to look bullish. Beans are very close to their highs, and corn isn't that far behind. What am I seeing? I see rising bottoms and flat tops. The daily lows don't dip as low as the previous one, and that's rising bottoms. The tops match up pretty well, giving a flat top look. This is akin to a rising wedge formation, and that's common to see when buyers are having to fight to get their buying done, overwhelming the sellers. We could see higher prices yet in the future. In cotton fell back last week, and we are modestly higher so far this week. There was a news article showing that India's cotton imports could increase by 10% this next season due to poor domestic production. But much of that business is likely going to go to Brazil and Australia first. In fats and feeders, limit down last week, limit up yesterday. This carved out a double dip of a low. Government uncertainty is keeping steady buyers away. Short of a screwworm outbreak in the United States, fats and feeders are going to be carving out some kind of a sideways trading range. Not only will it be a choppy trading range, but it will have to do some chopping around before it even settles into one. Fundamentals suggest that lofty levels will continue because it's going to take months and months for cattle to find some equilibrium. March feeders have an old trading range that it might try and rejoin. That would be March 330 up to March 356. We are sitting at March 326 here this afternoon, so there's some upside to work on before it could reach up there, but that's what I'm looking at. And in hogs, we got a big surge yesterday, well overdue, and we are higher again here today in the Feb. We tested support at Feb $80, and we're still eyeing the 84 to 86 level. We got up to 83.60 today. That's it for today. I'm Chad Toyne, and this has been Trader PhD. Past performance is not indicative of future results. Futures trading involves substantial risk and is not suitable for all investors.